Hi all, welcome to this new episode of my podcast, A Digital Tomorrow. Today, I'm joined by Simone Martin. Welcome, Simone.
Thank you so much for inviting me. Glad to have the opportunity to join you.
Thank you, it's actually my pleasure. Simone has worked as a regulator for the past 20 years with the British Virgin Islands Financial Services Commission. And she also spent some time working with the Anguilla Financial Services Commission. During this period, she contributed to legislative reform, the conduct of compliance inspections. She created and delivered training for local, regional, and international regulators, as well as financial services professionals. From 2008 to 2019, for 11 years, almost 12, Simone served as the secretary of the Joint Anti-Money Laundering and Terrorist Financing Committee of the Virgin Islands and was a member of the National Risk Assessment Steering Group of the Virgin Islands as well, from 2014 to 2016. And one very interesting thing that you will learn about Simone during this podcast as well is the idea that, well, despite coming from the world of compliance and from regulators, she's also, as she calls herself, a regulator with crypto, which is a very interesting idea that we're going to discuss later. So, Simone, now that I just summarized your amazing biography, could you please tell the listeners a bit more about your journey? Why did you become interested in FinTech? And also, as a recognized thought leader and female, what kind of challenges and difficulties have you encountered?
Well, thank you so much for that introduction. And as you set out, my background is somewhat dynamic. I've been fortunate to have a lot of diverse experiences in regulation. And for 20 years, it's been a lot. I've worked in several sectors. Investment business was my first, but definitely not my last. I worked at senior levels in the trust and corporate services sector, which is one of the areas where I have my expertise, as well as banking and insurance. And I was also trained as an FATF assessor, participated in one assessment under the third round, but also trained under the fourth round, which is quite critical for a lot of jurisdictions. And one of the opportunities that I was really proud of that I like to highlight whenever I get the chance is that I was a core member of the working group for the Group of International Financial Centers Supervisors that produced the International Standard for Trust and Corporate Services Providers. I also worked a little bit behind the scenes in an IAIS member application for a jurisdiction a few years ago, and that might not be widely known. So I tend to straddle a lot of different areas. And you also highlighted the fact that I was a facilitator and a lecturer for a number of years on a number of topics. I think the common thread within me is that I'm curious and I'm passionate about the learning process. And FinTech was just an eventual evolution of that, I find. The curiosity was really sparked in 2016 while I was attending an FATF plenary. And that is when I think FinTech, cryptocurrency, digital assets were really gaining some traction alongside beneficial ownership issues. And I started a push for more to be done in that space here in the Virgin Islands. But sadly, I was interrupted in that particular campaign by the passage of Hurricanes Irma and Maria in 2017. But I'm happy to say that I got back into the FinTech space in a real way during my secondment in Anguilla with their Financial Services Commission. And so I've had that opportunity to really connect with professionals like yourself and a lot of others in the blockchain analytics space, certain innovators who are developing really interesting things that I can't talk about as a regulator. Some of that information is proprietary,
Yes.
but it's been quite a journey.
Mm-hmm. I see. Well, thank you very much for sharing. Actually, your profile is quite unique in many ways, and also when it comes to my podcast, because you are the first person coming from the compliance world, to put it this way. So that's what makes this episode even much more exciting. And you're also a YouTuber as well, so that's something that I wanted to talk about. You have a very active channel on YouTube. called the Side of Regulation, if I'm not mistaken, in which you post videos about well, your topics, compliance, AML, regulation, and it's actually a very successful channel. I've been following your videos as well for a while, and I've been learning a lot from you. So I wanted to ask you, like, what made you decide to start this channel, and what do you want to achieve through it?
Well, it's actually the Sea of Regulation. So it's a play on my name and also my love of the ocean. And it's a bit of a nod to the whole offshore concept that we keep hearing on this part of the planet. But my YouTube channel and my blog and a compliance membership are all part of me following my passion. Now, specific to YouTube, one day I was actually looking for something. I'm always looking for new perspectives on compliance and from areas that might not be in financial services so that you find analogies that work. And I didn't find anything on YouTube in the space. And it was the same thing with my membership. And I think you would agree that it is exceedingly rare to find a space that is open to explore in this day and age where someone hasn't had anything being published on social media. And so it all goes back to my passion as well as a desire to help others, which might sound a little strange as a regulator. But in my role as a regulator, sometimes I'm the one administering the test and I can't give the answer. And so there have been experiences where I am maybe carrying out an inspection and I hear a compliance professional say something or do something, and I cringe internally because it's like, oh, I wish I could tell you not to do that or how to deal with that better. So it's one of the things that I've been able to, I think, reach people through my YouTube channel and hopefully more reach through my compliance membership, which I just launched last month and had a little break because of a tragic family issue. And I'm going to be relaunching it. And the membership is called Chasing Compliance because professionals seem to be always trying to chase compliance. And whether, there's such a thing as perfect compliance, I don't think so. I think it's akin to achieving the speed of light, to borrow from my sci-fi. Yes, I'm a Trekkie, live long and prosper, for my Trekkie roots. But I think it's one of the things that as professionals, we can help each other if we have an open dialogue. And the compliance membership is definitely a safer space for people to comment where they might not want to put those comments under my YouTube channel in the comment section publicly for the world to see.
Mm-hmm. Well, I think this idea of educating and allowing people to share their thoughts and concerns in safe spaces is actually very important, because it's what we said before. No, I mean, we can find like many things or news in the media, but sometimes we have our own doubts or concerns. So finding someone like you, they're willing to educate and help is actually something very important. And then, sorry.
No, I think so. I definitely agree.
And well, going back to your channel as well, when I was introducing you before, you talked about, well, I described you as a regulator with crypto, but not because I made this up myself, but mainly because you described yourself that way in one of your videos.
Yes.
So, well, why? I mean, I know it's obvious, but if you could explain why do you use this description, and also what kind of challenges or threats do you think that cryptos may pose from a regulatory perspective, either in the Caribbean or worldwide?
Okay, well, I think that particular video was important because there has been so much said about regulators being anti-crypto. And that is actually true based on some discussions I've been privy to within some regulatory spaces. And some are all war. Sentiments are changing. But part of the issue in adoption of crypto by everyone, including regulators, is that unfortunately early on, regulators were vilified, and anything smacking of banking regulators or laws and regulations were seen as the antithesis of innovation, which is not true. And so I think that is where regulators and crypto started off at odds. And then there was the element of crypto being used by criminal elements. Now, it's true for anything. criminals are some of the quickest adopters of new technology. And those two issues, the vilifying of regulators and the use of crypto by criminal elements in the early days, seems to have been conflated into this view that, well, crypto is evil. And let me be the first to say it is not. People are the ones who are good or bad or misguided, not crypto, not businesses, not companies, not countries. And in my view, the challenges globally is to understand what the various facets are in the space: digital assets versus virtual asset service providers versus NFTs. And the space is always evolving every day. And the application for those digital assets or utility tokens and the tokenization of everything, I find it exciting. But the regulatory challenge is also understanding it. And if you don't understand something, you can't properly regulate it. And that's to borrow from Albert Einstein saying, if you don't understand something, you can't teach it. And, I bought my first coins towards understanding the space. It was more of a, okay, I'm looking at this from a theoretical standpoint, but what are people talking about when they say hodl, and why hodl and not hold? And, simple things like that. It may seem simple, but once you actually purchase a few coins and work on, just developing your own holdings, I think that helped me personally process in my mind the risks and issues. And globally, I think it gives me some perspectives to be able to critique the FATF guidance that was issued in 2020. Now they've updated it a few months ago, and I still have some critiques, but and it may be controversial. I don't know if you like this on your show, but I'm the non-conformist regulator.
I mean, feel free to explain it if you want. I mean, sure.
Sure.
I mean, fine by me.
Yeah, so one of the red flags that was cited in that particular report was the use of multiple wallets by individuals. And that wasn't a red flag. That isn't a red flag. Because when I actually tried to buy coins for the first time, I had to create multiple wallets myself. It was a process of trial and error. And I had to figure out why I needed to have multiple wallets, because you can't buy certain things on certain exchanges. And so you end up with multiple wallets. And then you see some of the issues that some cryptocurrency exchanges have. And, it led me to get my first Ledger Nano and Ledger Nano S. And, I think that actually having to do it helps me appreciate where the real risks lie, not in someone holding a couple thousand coins, but in terms of the dusting of certain addresses, why you don't publish your private keys, and all of these different things that would be needed to help a regulator sensitize the public into this digital era, I think are critical. And so think about this. What then would the regulations look like that are created by a regulator that didn't understand or experience these things? And I will tell you, I will be the first to tell you that it will not be perfect, and it may actually frustrate the people that you're aiming to protect. So what I want to add is that regulators are training up quickly to navigate a lot of these issues. And one of the programs, it's a shameless plug to them, I actually was in the second cohort, is the Cambridge Judge Business School FinTech Regulators Program. It's an excellent program if you're in the regulatory space.
I fully agree with you. I mean, no technology is bad per se. I don't think that, either we talk about blockchain, artificial intelligence, or whatever technology. I mean, no technology is bad. It's what you said before when you were talking about criminal activities. It's all about people, how people use that specific technology. And well, I think that the crypto scene, the crypto industry in, let's say, 2012, 10 years ago, compared to now, is very different. I mean, the kind of users is very different. And well, I mean, in general, everything. And now it's much more institutionalized. I mean, we are seeing many more incumbents, big banks tapping into this market, which means that regulators need to start learning more about this. So I fully praise your approach to this. I mean, you may like or dislike cryptos as a regulator. In your case, well, you seem to like it, but even if you disliked it, you should know what this is all about. Otherwise, how can you regulate something that you don't actually understand? No? So I think this approach is actually very, very wise.
Thank you for that. It has met with a bit of controversy early on, but increasingly some of my regulatory colleagues in other jurisdictions are quietly reaching out, and I'm happy to have the chat with them or anyone in terms of my views. And I'm still learning. I'm not a techie by any stretch of the imagination, but certainly it's one of the spaces where I think a lot can be done positively.
Yeah, I can imagine, but the same idea applies, for example, to this constant fight, which is not a fight to me, but it used to be between FinTech and big, large incumbents, the traditional banks.
Mm-hmm.
You've seen the media for years trying to present this as a fight, and to some extent, a few years ago, whenever you talk to a big bank, you could feel this kind of reluctance towards FinTech firms. But we are reaching a point, especially after the pandemic, where big banks realize that they may get something from FinTech firms, and FinTech firms realize that they may benefit from institutional players as well. So I guess it's going to be the same in the crypto world, and that's why I think that everyone needs to try to learn more about it, whether you like it or not. I mean, no one says that anyone needs to trade cryptos. I mean, you're free to do it, but I think that at least understanding more about this phenomenon, that's important.
And you mentioned trading crypto, and that's one of the points that I do want to touch on just briefly. There are some regulators that have come out very strongly to say that the average person should not be permitted to trade cryptocurrency. And I think that's flawed. Personally, there is no restriction in my mind to someone who is willing to educate themselves in terms of the risk reward ratio for trading cryptocurrencies. And, I have a friend in Anguilla who was quite good at it. Is it risky? So is gambling. And that's a space, again, regulated, but you don't tell someone, well, you are not an accredited investor, so you can't gamble. And I think the same would fall true to trading. Now, should they be mortgaging their house to trade? No. But again, this is part of the role that regulators need to make sure that they are well positioned in terms of protecting the public, putting information out there, but you can't remove yourself from all risk. And regulators are not in the business of eliminating risk. No one can do that. And I think that that is a message that globally needs to be set. There may be other reasons why some regulators are thinking that they shouldn't be trading. The crypto space is volatile, but the volatility will evaporate as I think adoption comes along and more people become aware of exactly what is going on.
I agree. I mean, undoubtedly, trading cryptos may be volatile, but investing in the stock exchanges, it may be volatile as well. And I mean, and you talked about gambling. Gambling is much more volatile, and many people do it, and it's allowed in many jurisdictions. So I guess that in that sense, trading cryptos is not much worse than any of these other things.
Yes.
And I wanted to talk now about FinTech in the Caribbean, because it's a very interesting region in the world, which it tends to be sometimes neglected, because even though there are many countries in the Caribbean, we are talking about small countries. So whenever people talk about America, they normally use to focus on the US or Canada or even Latin America, but they tend to neglect, unfortunately, the Caribbean sometimes. So that's why I wanted to ask you, could you please share with our listeners a bit more about the FinTech industry in the Caribbean? What challenges and opportunities do you see in that industry?
Sure. I mean, one of the things that I've seen from certain countries is that the Caribbean FinTech scene is bustling, and industry participants seem to be chomping at the bit for something to happen in a number of countries. And regulators, for most part, are quietly working on addressing their minds to scoping laws that work. Now, I can say that Anguilla is one of those jurisdictions that is a quiet regulatory leader, and that was long before I got there. They actually licensed the Bitcoin ATM years ago. I was stunned to find out how much they had done in the space, and it wasn't really that widely known, but they tend to position themselves as more luxury location for tourism. And I think the financial services direction is going towards that as well. So family offices, innovators are definitely welcomed. But, beyond their utility tokens and exchange legislation, one of the things that I think helps regulators that are nimble is to just have the discussion. because smaller jurisdictions allow for proof of concepts to be sorted out a lot faster than larger jurisdictions. And if any jurisdiction was to prove that, the fact that Bahamas came out with the CBDC first should tell everyone that they should be looking a little more in the region. But as it stands to challenges, one of the biggest challenges always found in the region is the resources of the regulators. We're small, we do punch above our weight, and so we're challenged to get a lot done by very few people, but the opportunities are great. And if you don't mind, I could definitely go on to a bit about the my views in terms of where the Caribbean can go next, because
Sure,
one of
sure.
the things that I see is a Singaporean emergence through financial services and FinTech. So much so that I wrote a blog about alternative finance solutions needed in the Caribbean. Now, I've been pained personally sending money from myself to myself while I was in Anguilla. And I see the challenges that happen in terms of cross-border remittances, wire transfers, and for businesses that need solutions in terms of just engaging with vendors internationally. It is painful when a wire transfer, and I've had this happen to me, when a wire transfer takes a week or more. In my worst case scenario, I had one wire transfer take 3 weeks to travel 125 miles in 2021, which I
Insane.
found to be absolutely insane. And it was like, again, one of the spaces that digital assets can definitely help is in relation to that. And when you have vendors trying to operate globally, and in the Caribbean, we pay disproportionately higher rates for credit card transaction fees and remittances and wire transfers because of de-risking and some of the other things that have happened in the past decade. Compound that with an active hurricane season when the wire transfer doesn't get there a particular day and you miss your shipment date, and then the shipping is delayed by 3 weeks because of a passage of a hurricane. It's just crazy. So there are a lot of things that we can do with the wasted monies and inefficiencies. If we had that time back and that money back, I really do believe that the Caribbean can have its own Singaporean emergence in a number of industries. And it's one of the spaces I'm definitely looking forward to.
Well, that's actually a very interesting explanation and comparison. And you mentioned as well the Bahamas and its sand dollar. And I precisely wanted to ask you now about central bank digital currencies, which, as you know, is one of my main areas of research and interest. So the Caribbean is, well, undoubtedly like one of the most active regions in the world in that area, to the point that not just the Bahamas launched its sand dollar in 2020, but last year, for example, in March, Dcash was launched by the Eastern Caribbean Central Bank alongside or in collaboration with the Antigua and Barbuda government, Grenada, St. Christopher, and Nevis, and St. Lucia. So could you please tell our listeners a bit more about both projects, or maybe why this area is so active when it comes to CBDCs, which you kind of replied before when you were talking about the difficulties that you encountered, but still.
Sure. Sure. So one of the issues that impacts the region, the Bahamas, Eastern Caribbean Union, and other countries within the region, is the de-risking by correspondent banks. And that, I think, was as a result of some guidance that was put out by FATF in relation to recommendation 13. And there are many people that don't necessarily see the correlation between compliance issues and then de-risking and more expensive remittance and wire transfer fees. But the CBDCs in the Bahamas, now the Bahamas is an island chain of I think it's 700 islands. And the ECCU is a union of about 8 or 10 Caribbean countries. So you've included correctly Grenada, St. Lucia, there's Dominica. Anguilla is also a part of the union, but they've launched it in just a few countries. And part of the reason is to remedy that access to capital and to facilitate cross-border flows. Now, within the region, it is not uncommon for people to migrate and have families in different islands. And again, remittances within the region are also quite high. There are lots of studies that focus on remittances from outside of the Caribbean into the Caribbean, but not so much so remittances within the region. And digital currencies, CBDCs in particular, would help address with that, especially when we're spending some of the same currencies in some Caribbean countries. But more broadly, when you want to exchange currencies, a lot of persons don't recognize that there are, I think, 6 languages within the region. So Spanish, Dutch, Papiamento, there's a French Creole, English, Spanish, and I'm sure I'm missing something, which would be a 7th. You have 6 or more languages, you have just as many currencies, or actually more currencies, because of independent countries. So, and plus the US dollar, that exchanging of currencies is also something that causes friction within the payment system. And CBDCs would help to address those friction issues. And I think that it is one of the areas where governments do recognize the need for CBDCs in helping foreign direct investments, cross-border payments, businesses to be happier and more certain with their activities. And so it's a lot that's going on. And one of the things that I was able to work on, and I'm happy to actually share, I'm not putting anything out there that's confidential, while I was in Anguilla, is a digital payments bill that will be published for consultation soon by their commission. And it was driven by the pain that I heard from people trying to conduct business. And so it's one of the things I'm definitely looking forward to. And if any of your viewers are interested in just reaching out to me to have a discussion about this, if they're in the region or not, feel free. I'm on LinkedIn because it's a lot going on. And it's an area, like I said, I'm actually quite excited about the transformation that can happen.
Mm-hmm. Well, as you said, if anyone wants to learn more about it, feel free to reach out to Simone, who's an expert on these areas. And I mean, indeed, it's quite amazing to see such a small region compared to others being so active in this area. But I guess this comes, as you said, this comes from a need, this need of trying to make payments more efficient because we're talking about a small area where many different currencies are coexisting, many different languages. So I guess there was an actual need for that. Yes. And well, before wrapping this up, I want to talk a bit about compliance, which is sure. Your area of, your main area of expertise as well. And from a compliance and AML perspective, what are the main challenges, threats that the Caribbean as a region is facing, according to you?
Well, one of the areas that I am in the process of writing a blog about is, I think, a hyper focus on AML CFT issues to the detriment of market conduct and some other areas. And it's because we too have a test to pass. There are a lot of things that I find in the AML sector are not fully understood by others who would be scrutinizing us. And there's a lot of misinformation and preconceptions that come in when we are being assessed by other external bodies, FATF, OECD, and the others. They think offshore and they think that we're regulating under a palm tree on the beach, which is part of why most of my videos actually have a beach in the background. Yes. It's kind of like a little, snub to that particular concept. There's a lot going on in these jurisdictions, as anyone who wishes to pay attention would quickly learn. But compliance is expensive. And there's a publication that has been out annually for at least over a decade, Thomson Reuters, I think it is, that publishes the cost of compliance. And they, prior to the pandemic, they were looking at compliance becoming a cost of, I think it was $425 billion globally. Now, again, costs impact the Caribbean region disproportionate to other parts of the world. So that expense is one of the biggest challenges that both the regulators and the regulated and the public have to pay, because when compliance is not well understood, you actually add to the cost. And again, this is part of why the membership, the YouTube channel, the blog, because people don't understand that if I know someone is laundering money, and laundering money happens in every jurisdiction on the planet, maybe with the exception of Antarctica. If they're laundering money, they don't understand the inflationary effects that that has on real estate, on certain goods. And so you might be thinking, well, the bad boy down the block, whether you are in the Caribbean or you're in Manhattan, and you are aware that there are bad boys on the block and they're laundering money, and you're thinking, well, that doesn't impact me, but they can afford to pay more for real estate. It means that you'll be renting at for a longer period of time at your middle income wage or lower income wage than you anticipate holding. And so people don't understand that there's a cost that is passed on to you, even if you're not in financial services compliance. And it's something that I'm passionate about explaining, because then the cost, when I see banks telling customers that they have to provide due diligence because the regulators say so, that is one of my pet peeves, because it says to me that the bank doesn't understand why they're doing it. And then the lack of differentiating due diligence based on risk, which we've been talking about for almost a decade now. Again, not to target the banks, but it's an area where a lot of people have exposure to, and so they understand it. You're asking for passports and driver's license and utility bills from everyone, including your grandmother, who is collecting a pension and is probably lower risk, and you're not applying simplified due diligence, which would cost you less and reduce your overall compliance costs. So there are a number of different areas that are impacting AML CFT compliance that is not well understood, even by the people who are applying compliance. And dare I say, even to some regulators might not understand it. And it is adding to the cost. And we need to, well, I'm trying my best to disrupt it so that people can think critically about these issues and have better compliance results, but also something that is attainable and less expensive and painful for everyone involved.
Mm-hmm. You actually made reference to an interesting point when you said that, well, you met some people, or you know of people who maybe tend to think of you in the Caribbean like regulating maybe outside a palm tree by the beach. And well, I mean, based on my experience as well, sometimes whenever you talk to certain people and you tell them that this company with which maybe you're conducting business is incorporated in a country in the Caribbean, they tend to think that perhaps that's shady. I mean, because, you know, these ideas of offshore, it may sound bad to some people. So what would you say to these people? I mean, because you've been involved in working in regulation in the Caribbean for many years. So what would you say to these people to convince them that compliance-wise, AML-wise, you do whatever you need to do and whatever any other jurisdiction does? Because as you said, money laundering and these kind of activities happen like anywhere, maybe except Antarctica, as you mentioned. So how would you like convince them that you are actually all of the Caribbean, like serious countries, and doing things properly and well done?
Two things. There are two things. Understanding the reason that people might use a company that is incorporated in an offshore jurisdiction, as well as showing them exactly what the compliance requirements are. Now, the utility, and you know, I think it's really interesting where some of the utility issues of offshore vehicles bridges FinTech, because they actually do. The utility of having, say, a BVI business company is because you want neutrality. It's not to evade taxes. And in fact, a number of companies pay their fair share of taxes around the world. BVI just happens to be a popular jurisdiction for a number of reasons, but our service providers, unlike many other jurisdictions, are prudentially and AML regulated by the regulator in the BVI, and it has been since 1990. And a lot of people don't know that. But you would have a company in the BVI. Say you and I want to get into business, or maybe you and one of your colleagues in academia in the UK want to get into a particular FinTech venture. You have some innovators who have some ideas from different places, Slovakia, Ukraine, different places. where will you have that operation run from? We won't put it in a Spanish company because that favors you. We won't put it in a UK company because that favors the other person. We won't put it in a Slovak company because we're not familiar with the laws and we don't speak the language. So you put it in a BVI company where all of you would be the directors and shareholders for that particular enterprise to be developed. And if it is, now here's the beauty, and I'm sounding like I'm marketing and regulators don't market.
Oh, it's fine, it's fine.
But here's the beauty of having a BVI company. It's based on British common law. The case law is well established. So if you have a dispute with all of these people, you can have the confidence that you will be going to a court system that is globally respected, and you can have it arbitrated or dealt with in a commercial court and it's typically 99% of things are dealt with in a commercial court, and the records are public unless otherwise sealed, and they go through legal proceedings. And you have the highest appellate circuit is the Privy Council in the United Kingdom. So it's not that people are just incorporating companies in the BVI or Anguilla or certain other overseas territories just for the sake of palm trees and sandy beaches. It's because it gives certainty to the fact that if you have a dispute, you can resolve it. That's one of the biggest things. And then the recognition is also important internationally. But in terms of compliance, we have been regulating trust and corporate service providers in the BVI and the other overseas territories since the 1990s. This is now taking off in G20 countries, like just. In the United States, we're familiar with some of the states that are very popular for this type of activity, and they don't really have a regulatory framework yet. And you only have to look at the USA's mutual evaluation report to see some of the issues. So that is one of the things that I would definitely want to see. And I would want to cap that by saying that, regulators never give advice, but my guidance to anyone seeking to do business in the Caribbean is definitely to do your due diligence, because not all jurisdictions are created equally. I have knowledge on how overseas territories work pretty well as compared to other jurisdictions, and those would be the BVI, Anguilla, Cayman Islands, Turks and Caicos, Bermuda, and to a lesser degree, Montserrat. But as it relates to innovators, not just financial services business, so the FinTech people, again, do your due diligence. The overseas territories are great, but if I were on the other side, my short list of jurisdictions for innovators would be the BVI, Barbados, Bermuda, and Anguilla. And that is a free tip that I can give because I am currently on a leave of absence and not regulating anyone.
I see. Well, thank you very much for sharing that. And well, that puts an end to our discussion because we're running out of time. It's actually been great to discuss for over half an hour with you about crypto regulation, FinTech in the Caribbean, CBDCs, and the Caribbean in general. It's been, as I said, great. I got to learn a lot from you. And I would also like to thank you for your YouTube channel and also for this idea of trying to educate people on FinTech, the Caribbean, which I think is very necessary. So for that, I would like to thank you as well.
Thank you so much for the opportunity to be a part of your podcast. Hopefully you have another topic that maybe I could contribute to in the future, because I definitely do enjoy these engagements. And I wish you the greatest success on your engagement with professionals and thought leaders. You're doing tremendous work, and thank you so much.
Thank you, Simone. It's actually been my pleasure, and you are invited to come back here whenever you want. And well, to all my listeners, thank you very much for listening to this episode. Please stay tuned for the next episodes. Thank you very much. Bye.
Bye.